हेलो साथीहरु नमस्ते वेलकम अल अफ यु टु माई च्यानल। आजको डिस्कसनमा हामी चाहिँ सोर्सेस अफ सर्ट टर्म फाइनेन्सिङको बारेमा छलफल गर्नेछौँ। र बेसिकली व्हेन वी से द सोर्सेस अफ फाइनेन्सिङ बेसिकली सर्ट टर्म सोर्सेस विच मेच्योर विदिन अ इयर भनेर सर्ट टर्म सोर्सेस अफ फाइनेन्सिङ भन्छौँ साथीहरु चाहिँ। र बेसिकली वी आर गोइङ टु फाइनेन्स आवर करेन्ट एसेट्स और सर्ट टर्म इन्भेस्टमेन्ट थ्रु दिस सर्ट टर्म फाइनेन्सिङ सोर्सेस। Your short-term financing sources could be categorized into broadly, we can say that unsecured sources, and next one is the secured sources. What about the unsecured sources? The sources which are not backed up by the security, you can say that collateral. But unsecured sources अंतर्गत चाहिँ we have spontaneous sources, which is basically like a trade credit, or you can say that account payable. Or next one is the accrual part. Accrual is simply like a wages payable, salary payable, tax payable. What about the payable? That is the accrual part. That is the trade credit and accrual are the spontaneous sources of short-term financing. Now what about the non-spontaneous? Like one of the important sources is the bank loan. Like bank loan could be like a line of credit, revolving credit arrangement, bank overdraft. Next one is that's a commercial paper. Commercial paper is again the one of the important sources of short-term financing. But remember, the only highly credit worthiness company, companies with a good rating, they could raise the short-term financing through the commercial paper. Now next one is that secured sources. Under secured sources, look at the term, that is the AR is the account receivable financing. Sometimes we have a credit sales and receivable is there, but we sell that receivable to the factor, which is a financial institution which could collect your receivable, but they would charge the commission that is known as factoring commission, friends. Next one is that your inventory financing. Inventory financing, like inventory, we know that could be raw materials, work in progress. But because of lacking of funds, sometime we also approach to the bank as well to raise the your short-term funds through the inventory financing, friends. So here inventory could work, even the raw materials, work in progress could be used as a collateral or the security. Now let's move to the next one is that, as I explained earlier, like spontaneous sources which include trade credit and accrual. But remember, friends, there is no explicit cost attached with either of these current liabilities. But if we say that when the seller, supplier provide the sell goods on the credit, then what type of cost is there? Then that term is known as cost of trade credit, friend. This is the spontaneous source of finance. For example, if we say the credit term is 2/10 net 30, that is, if the customer pay within 10 days, they could enjoy the 2% cash discount. But if they pay beyond that period, they will not receive any cash discount. Basically, here the seller provide the cash discount for the inducing the early payment. But remember, when the customer receive this discount, that is the great opportunity for them. But at the same time, that is the cost to the supplier or the seller. So when you are asked to find what would be the cost of trade credit, then simply you need to recall this one. That is the percentage of discount. That is here we have a 2% discount, so is 0.02 divided by 1 minus 0.02. That is the 1 minus discount percentage into number of days in a year, 360 days, divided by credit period. That is here we have 30 days. Minus discount period is the 10. Then once you multiply by 100, then you will have a attractive annual saving rate 36.7. That could be for the customer, but at the same time that would be the cost to the creditors or seller, you can say that. Now if the question is about what would be our effective true interest rate for this case, again, then you say that is the simply we use this equation, that is 1 plus discount percentage divided by 1 minus discount percentage whole to the power 360 days divided by number of extra days to make the payment. That is simply credit period minus discount period, then minus 1. So you would have a 43.836 is our, that is just for the second case. So implication of this trade credit is that this is the one of the important sources of spontaneous financing. But as a seller, when you are planning to induce the early payment, then this strategy might use by you. But at the same time, remember there would be the cost of trade credit also, friends. So these are the things that I would like to share to the friends. In coming days, I will be discussing about the line of credit and the revolving credit arrangements, including the commercial paper cost. Okay, friends, take care, all of you. Thank you.